Welcome back to Mortgages Made Easy. Today, our guest is Adrian Moloney, Group Lending and Sales Director for OSB. They're one of the major stalwarts of the mortgage industry and a big player in the specialist mortgage market. So welcome today, Adrian.
Thanks for the invite, David.
No problems at all. So before we go into the specialist side and what a group sales director is, do you want to just give us a quick overview of how you came into this industry, where you started? I've obviously known you a long time. And yes, where did it all begin?
Well, it's 30 years this year, believe it or not. Wow. So, I know I don't look old enough, but, like probably yourself, me, many others, I kind of wandered into this industry with needing a job. Obviously, 30 years ago, there was a centralised lender in Epsom at the time called Mortgage Trust, and I ended up going in for an admin job. I mean, I guess through there, I did a bit of underwriting. Probably the defining moment in those early years was I went and worked on site in charcoal for the lender. Okay. That was the big brokerage at that time. Don't take offence. We'll come on to Alexander Hall and others as we go through that. And then I moved to Portman, where I probably met yourself, working with a lady called Vicky Kingston, where we looked after the sort of top central London accounts, sort of from an underwriting point of view, but we were the point of contact. I was then given an opportunity to be BDM there for central London, looking after, let's get importantly, Alexander Hall, people like SPF, Cobalt at the time, Charcoal. And as a business, we acquired a small buy-to-let or specialist lender called Sunbank, which has gone on to be the Mortgage Works today. So from small acorns and all of that. Portman was then acquired by Nationwide Building Society. The brand fell away, and joined at a time when Nationwide were launching Nationwide for Intermediaries. Ian Andrew headed that up, and I went on through a couple of roles there to the corporate account team for 3 or 4 years, and then 10 years ago the opportunity came to go at One Savings Bank, probably well known more for Kent Reliance at the time, as the sales director for that business, looking after what was Kent Reliance for Intermediaries, InterBay, and a second charge lender called Prestige, which no longer trades. Then we acquired Precise Mortgages, probably the second biggest specialist lender as it was at the time, brought those together with various brands, and now I head up that division and a team of 90 that sort of sits in various roles below me.
Fantastic. Can I ask one favour? Can you actually put out the number for Prestige? Because I tend to get a lot of phone calls from your...
Well, and it's probably not too far from where you live as well. So I'll make sure, but that's my action to go away and remove that.
Thank you very much. That'll
might get some referrals on the back of it. You never know. So
we've had a couple, but when there are quoted account numbers, I have to explain we're a mortgage broker, not a lender. It's always an interesting conversation. So, but I'm quite keen to go back to when we obviously first met, which would have been back in. I was at Alexander Hall, and obviously you were at the Portman. So tell me about how it was like being a BDM back then versus what it is today, would you say? Because
I thought it was quite fun being a BDM. I'm not sure. I think most of them would say the same. Look, it's a great job, right, to go out and do. You meet great people like yourself, and I was fortunate enough, London was really busy at that time, London mortgage brokerages. Alexander Hall was growing at a phenomenal rate. And I got to know, I said, people like yourself, other people that have gone on to set up their own businesses like you did. And that stood me in great stead. I guess probably the big difference was probably the data that BDMs get today. You can almost spoon feed them where to go. There's things like Mortgage Clarity, which tells you the UK finance figures of what brokers are writing, so you can get a steer and segment it a lot more. Back in those days, I guess, and I'm not the most organised person, it was a more of a sporadic approach. And I guess, as you know, in those days, you could almost walk into the brokerage. You didn't have to have a fixed appointment. You know yourself, there was BDMs wandering around, people from Halifax, people from NatWest, etc. And literally you could go in and you'd talk through a case, but you'd walk away, you go back out there and go, blimey, right, there's 10 deals in, and you'd see them in, you guys were so busy, albeit it was paper applications in those days, which you probably hate. You'd see those apps come in a day or two's time. So I guess today for a BDM, it's probably more structured in how they get their appointments. I guess COVID changed the model for a lot of brokerages, people working from home, so they have to be more organised of when people are in the office. And it's kind of evolved. We I look at our own business, we have a team of office-based BDMs, because there are some brokers that might not necessarily want that face-to-face support, whereas the model then was purely if you were in someone's face, you saw them regularly, you were really available on the phone. That still hasn't changed. You tended to get the business.
Yeah. I mean, if I think back to those days, probably one of the reasons we got on or whatever is because I could call you up and pitch a deal to you.
Yeah.
Whereas now, lenders are, especially the sort of bigger lenders, they are restricted quite a bit to their set criteria.
Yeah.
But if I remember rightly, if I had a good deal, Adrian a call.
Yeah, I mean, I guess that was the bonus of coming out of the underwriting world. You knew how the flexibility within the policy worked. I mean, I was lucky, the team I worked with, particularly at Portman, Richard Litchfield and Vicky, they were exceptional. They had great relationships with the brokerages that we dealt with as well. But and I guess in a funny way now that you say, you kind of reflect back to Portman, it probably was an early evolution of specialist lending because it wasn't the system says yes or no. It was, I've got this guy, the LTV's right, the income's right, young professional. Can you do a stretch on the affordability? Yes. And I guess that's where you are in specialist residential today to a certain extent.
Yeah, that was it. I mean, an old story I always remember is, calling up Vicky, for example. I think it may have been Vicky, where I've pitched a deal. She said, yeah, fine, sounds good, whatever. And then left a note on a book. 6 weeks later, the clients had found a property and was going, oh, no, that's outside of our criteria. I was like, but no, I called up 6 weeks ago. And then she trawled through the book. I went, oh, here you are. I spoke to you on that date. Yes, we'll do that.
It was a bit like a This Is Your Life book because all the cases, you had to note them down. And again, you say how the world's changed. You'd obviously have almost that recorded, probably a CRM. Back in that day, there was a big book like that with the deals we agreed. So, yeah.
But I know it's still good. And it's still, I guess the reason why I'm asking about it is because it's obviously in a day where everyone's going CRMs, being too automated. There's still a bit of a place where...
There's a place for paper, right?
Yeah, well, or sensible lending.
Yeah,
so we'll come on to that in a bit anyway, because obviously that's your world where you are now. So the Portman going into what Nationwide, you were sort of hoovered up by Nationwide. How did that come about? Or obviously we know, they got bought, but what was the transformation like and transition for you?
Yeah, it was very different. Nationwide, and I had a great time there and enjoyed my time working there. It was a big corporate beast. I mean, it's a huge business. They were on the start of their journey, I guess. They never had an intermediary sales team, so that was the first bit. As I said, Ian Andrew came over to set that up, did a fantastic job, and I took a lot from. You get people that influence over you over your career or people that you watch. He was really focused in setting that up, really strong mindset. And it was a big job. I think they recruited 40 or so BDMs. And at the start, there was Nationwide Specialist, which was TMW, a brand called UCB. Blimey, I'm starting to remember it now. So we sat in that, and then probably a year, 18 months into where they'd got their sales team established, they combined them. And it makes perfect sense. Why would you have people knocking on one door with, at one time, an hour later, you got someone from UCB, and then an hour later, you got someone from TMW. So they combined that. It was a smart move. But it was a lot more rigid. It was a lot more, I guess, we talked earlier about the creativity of the deals and, what it's like today. A lot of that flexibility fell away because, they were building for volume. They had a score-based system. It was very much plough through the numbers. So from that point, it was very different. But I guess compared to Portman, what it did give me as an individual was the opportunity to branch into that more corporate world in terms of distribution. So looking after networks, looking after clubs, got to know senior contacts in the industry. So it was really good for me from that point of view. But it was very, very, very different. Portman, I look back, it was very similar to One Savings Bank when I joined it, which was.
So you learn your people skills from being the Portman, being the man that's getting sent into battle to win the business, and
but I think there was twofold. I learned a lot in Nationwide potentially about, I don't know if managing up is the right way, but how you deal with people who's a slightly more senior role in a bigger business.
Okay, so how big was the Portman sort of outfit when it on the intermediary side when you got taken across?
Well, we had I think there's say about 8 BDMs. Not an unsizable sales force. The Portman at the time, I think, was the third biggest building society in the UK. Nationwide was obviously the biggest, and it allowed Nationwide to grow. Obviously, you took the book of mortgages that came over there, and also the savings clients were brought in. So it was a very good fit for Nationwide. I think they managed it well, the integration. But then, literally, on day one when because they announced the merger, I think they would have referred to it in the time, say in the September of 1 year, and they gave a year's notice for when the actual migration would take place. And literally I went into Portman House, everything had changed from green to blue and red. You had a nationwide building society, business card, laptop, everything had changed. I mean, they organised it really well, but it was I mean that business is huge compared to even what Portman was in those days.
So probably similar to what the guys at Virgin and Clydesdale are going through at the moment.
Yeah, I'd imagine so. I don't know too much about when all of that will happen, but you can see what they do with brands, and Nationwide is a phenomenally powerful brand, whatever they do with the other ones.
Yeah. So again, when you switched over to Nationwide, how far developed was the intermediary side of things, and what were they doing before? If I remember rightly, we used to take cases into their branches and stuff like
that. They started from scratch. I mean, literally, it was a big project, and I guess that was some of the appeal of the Portman had the intermediary relationships. Yeah. I think, not talking out of turn, they had a few guys scattered around the country that were meant to be BDMs. I doubt they ever called in Alexander Hall, and that obviously changed with the new structure. And I think at that time, I certainly remember some of the conversations with some of the big brokers. They were chomping at the bit for Nationwide to launch an intermediary sales team, because it had been almost branch focused, no support for intermediaries, but with this fantastic product range and the big balance sheet. And of course, it all happened around the time of the credit crunch. Yeah. And probably the one of the big UK lenders that wasn't as exposed was Nationwide. A mutual, big balance sheet, big savers deposits, but not exposed to securitization or anything like that. So a really safe home. And they say timing is everything. There was probably an element of timing with that Nationwide was able to grow, because it was probably one of only 3 or 4 lenders that had firepower at that stage.
Yeah, exactly. So what was the credit crunch like from your side of the fence? Obviously, I went through it as a broker at the coalface, but how did you navigate it?
We've lived a few bits since then, though, in a few instances. I guess, there, but for the grace of God, went Nationwide and us going over there, because I think it might have been much more of a struggle for Portman to have got through it. And, it was a time leading into that. There was, loads of jobs on offer, loads of specialist lenders, people like Adeas, DB Mortgages, and they were all touting around for BDMs. I like everyone you were probably approached, I decided it wasn't for me. I had a young family, another one on the way. Timing again was everything in a credit crunch. But we were one of the few lenders that had bits out there. I mean, it was, certainly the first 12 months were rough for everyone, because no one was buying anything, no one was remortgaging, rates were really high. Then you had that bit where base rates slammed down. I think it was it 0.5% or something like that. It was really low. Of course, Nationwide had a BMR rate at the time, which was guaranteed to be no more than 2 over base, which people like myself or anyone else who had a mortgage with them at the time was a bit of a godsend. But we as a business there seemed to come out of it quite quickly in terms of, as I said earlier, they were well positioned, well funded, well capitalised. We were launching this sales team. They stuck with that project, which must have been costly at the time. And it allowed us to get, 48 BDMs out on the road into the bigger distribution channels, and as people like yourselves at AH and things like that started to become more busy, we were able to get out there and capitalise on it. And, certainly TMW and BM must have been the only 2 buy-to-let lenders for a period of 2 or 3 years.
I remember it vividly.
Yeah, so probably a lot less worse than it was for other people at other lenders.
Yeah, but I just remember, having been around a bit, I guess at the time would have probably been quite relatively new to the industry. Not relatively new, but, bearing in mind the time that's gone by, it's still a vivid point, and the time it took for it to unwind and then go back again, it's about 3 years of proper disruption. It was just and it was it's very quiet. People weren't buying houses. It was difficult to refinance. I guess all the SBRs were cheaper than what you can refinance
there on the BMR. And confidence is a massive part of this market. Confidence wasn't there. And we were talking before we came in here about other bits that have gone on, even as we talk about recently with what's going on in the Gulf. Nothing I've experienced was ever like that, because literally and for our industry, as it was going into it, it was really buoyant, and it was like you slammed the brakes on straight away.
Yeah, but if you think about it, it was a credit crunch. Obviously, we're at the front of it. Where when we went through COVID, if you're in retail,
much worse.
Hospitality, things like that. That was their version of it. Banks stopped lending, and our job was to lend the money. But things do come back again. Yeah. So from an intermediary perspective, obviously Nationwide probably did a bit of dual pricing back in the day. How did all that phase out? Because it's not been a term they've been under.
No, I mean, look, banks have different distribution strategies, don't they? And at the time, I guess, I'll take the political way of putting this. You had an intermediary side and you had a direct arm. Historically, the direct arm there probably did more business than the intermediary arm. They invested a lot in the intermediary arm, and I think that, even when I was there, it leveled it out. There was less, you saw less direct products. And there actually it was quite good for us because as other lenders did it, as they came back to market, you always say, go in there, they're supporting the direct arm. But, I do think, they saw the value of the intermediaries. It gave them much more, I guess, option. Volume came in quicker when you wanted it. You could control it in terms of service levels and switching on and off. And actually, the fact that by even going back at that time, by having an electronic system, I guess, or front-end system meant that it was a lot less laborious to come in. And, of course, we all went through that bit, which was MMR, the Mortgage Market Review, and that definitely put the advantage in terms of the intermediary channel, particularly at Nationwide at the time. And it did help. Look, you had a strong leadership team there in the intermediary team. As I said, Ian, who set it up, was really focused, really driven in what he wanted to achieve there, and had a voice at the table, which was important.
Yeah, I was actually going to bring up MMR because that was the game changer in the intermediary side of things. I mean, if you think about it, the white elephant in the room was HSBC didn't deal with mortgage brokers at all.
Look at them now, right?
Yeah, exactly, and it was MMR that changed their mind. So for what you're saying, you were all set. How much change did you see from that side of the fence, or was it the intermediary side of the fence meant that there wasn't much change?
In terms, I mean, we spent a lot of time going out. It was the lead up to it, because it was a fundamental change in how advice was given, right? Affordability, plausibility, suitability. Historically, someone could walk into a branch, or I guess if there was a direct arm via phone, ring up and talk, a specific product to the branch. But actually, what it meant was that, and I think it's a really important thing is, borrowers were getting the best advice about the whole of the market. This. It's always easy to point to the top of the cheapest rate. And, you see people do it in savings, money supermarket, Martin Lewis, etc. And they follow what the guidance is there. There's a lot more to it than in terms of mortgages. I want that $3.99 5-year fix. Well, you can have it, but it'll take you 5 weeks to get it, and you need to do your remortgage in 2, or you need to buy the property in 2. And actually, I think from a borrower or customer outcome, it's probably the most important thing that's happened in the mortgage market, because people have had better experiences, they've had better outcomes. The guidance isn't, you're not just looking at one lender, your whole of market. And you can, from an advisor's point of view, we go back to that bit of Portman. You don't want a machine that says yes in that, or it looks like that's the best deal, but actually your income isn't going to do that. We need to go and speak to a lender that is more flexible on it. So, that was the real catalyst that has driven in terms of the intermediary share of the market. Obviously, there's probably challenges coming down the line as, with execution only, and whether some of the big lenders decide that, using an app for trying to acquire business is cheaper. But, I think intermediaries that stay close to their clients are well positioned to navigate this.
Yeah, I agree, and I'll probably come on to that a bit later. So, so what restrictions did it put onto the broker world? Obviously, if I think back to those times, we were giving advice, we were going through all those things anyway. During the Alexander Hall times, there was a period where they had to sharpen up on those sort of things. So we were actually up to standard already. Yeah. And myself, when I set up Prestige, my background was actually sharp already. So we'd already put that in place. So what restrictions did it put in place?
I think it formalised it. It made lenders look at you started to see it back in the day. If you remember, lenders started to look at things like, they call it quality. The quality of the business that they were getting submitted, whether it was in terms of conversion rates. And I remember a number of the high street lenders went out and they were going, actually, we're going to look at prop fees in terms of this, if your quality is below the average. So I think it almost formalised what was being done. the good brokerages were already doing it. So like you say, you work for a big corporate at the time. They would have had to have had that compliance infrastructure in place. But it meant from a lender's point of view, the eyes were on you to say, what are you doing in terms of measuring? You're not responsible for the advice, but you're responsible for the people that are giving the advice, that are submitting the business to you. So there was a sea change there. And I think that was the first bit where lenders started to look at, not necessarily the advice that was given, but the business that was coming in, the way in which it was processed and the quality of the business, with a number of metrics and making sure that it hit those. And that was certainly something when we sat in the corporate team, we'd deal with the networks or the clubs, and they'd all be going, where do we sit in terms of quality? Ironically, they all performed really well, or more or less the same. But what it did do was mean there was a high standard out there.
For looking from the outside, it's probably actually future-proofed them in the fact that the high street for banks has gone, apart from Nationwide, you're an employer. Giving advice in the banks actually is probably more in their favour that brokers looked after it, whereas before that,
they were responsible.
I'd prefer you go into the branch and get the advice.
Absolutely, and there's a fixed cost to that, and you are only advising on one set of products. The one that the banks they can't compare against the whole of the market. Now, we're going to come into an era where tech comes into this at some stage, and whether or not some of those banks look at utilising that to drive traffic away from the intermediary market will be interesting to see. And a number of them are highly committed. I think others out there in probably the more prime space have ideas about how they can use tech. We go back to the bit everyone was talking about robo advice 5 years ago. It never kicked on, but AI is the sort of buzzword now, and how you can use that, and potentially everyone's got a mobile phone with apps on it. Is there the opportunity to capture some of the market through that? So I think that's in terms of the intermediaries riding through the last sweep, I guess, of regulatory changes, being the dominant distribution channel, and I think they will in the market I work anyway. But in terms of some of that more vanilla lending, or I guess PTs where an execution only and that sort of thing, it will be a real interesting battleground for the intermediary market.
Agreed. So you're in Nationwide, an opportunity comes up to leave the high street, the vanilla sort of world, and you moved into specialist lending. Why and how's that been?
Why? Look, it was an opportunity to step up. So it was a sales director role. I got approached about it. I guess I was the first one of that team to leave, so it was a bit of a shock for some of the people in Nationwide, or in the Nationwide for intermediaries team, because we'd all been there since the inception of it. It was probably 10 years earlier. I just felt I needed another challenge at the time. I went through my mind, I am leaving a massive corporate. What am I doing going to a smaller lender? But, I spoke to senior people at one savings bank at the time. They'd floated. They were a FTSE 250 business. They wanted to grow. They were in markets that were really quite interesting. They had a much smaller distribution model at that stage, and the remit was go in and show us how to grow that distribution. We want to have a big bank presence, but be in the specialist market. So that all worked out really well. And as a business we grew rapidly. I remember being at one of the awards one night. That was literally as I just started, and I said to Steve Seal, who worked with me at the time, I said, in 2 years' time we're going to win that award. And one was the best sales team, and one was the best specialist lender. We won both 12 months later. So that was just like, wow, where is this going? And we brought in good people, experienced people, some that may have worked with me at previous guys.
Quite a few.
Yeah. That went down well. But they knew brokers like yourselves. They knew the big firms. We were able to establish that. And I kind of looked back at I learned a lot. I refer to Ian Andrew a couple of times in this, how focused he was, what he did in terms of setting up that sales team, and how he did it. And I've said it to him a number of times, and sort of followed that blueprint, but took the best of it and probably left the bits that I didn't like so much. So we were able to establish that really quickly. Then, about 6 years ago, I think it was, we bought Precise Mortgages, or that bank, who was the other big specialist lender, and it became the super tanker really in terms of the specialist market. And we offer a wide range of products. So it's still a FTSE 250 business. We've got distribution that covers all channels. And we're a successful business, and it's there's never a dull moment in it. I guess probably a bit like you, the biggest shock of moving from a big business like that to a much smaller business was when I was used to seeing the daily figures of apps that went through nationwide compared to what we did at the start. And it was like, blimey, what have I let myself in for? But, small acorns, we grew.
I imagine working on Park Lane, running a team, and next you're in your spare bedroom and the computer and the laptop doesn't work. So, yeah, I can empathise that. So what was the structure when you first took over? Was it just Kent at the time, or was there a few other bits?
No, there was Kent, InterBay and Prestige. Kent was probably the predominant brand. And, blimey, I must have sinned in a former life, because the minute I'd signed the contract and said I was going to Nationwide, Kent was predominantly a buy-to-let lender in the specialist market. And it was, first thing was, all right, we're going to tax landlords. So actually benefited when it came around. So limited companies became big. But, I was like, I'm going somewhere that does a load of buy-to-let. They're taxing landlords. And then the regulator brought in the additional underwriting rules. I'm thinking, why have I left the security of that job? But actually, from a specialist lender point of view, it really benefited because we were able to do all of those bits that sort of complied with the rules. We had InterBay, which was, we still own it today, obviously, was a real small commercial lender, and probably only had 5 brokerages that dealt with it for whatever the volume was at the time. So we grew that with the sort of specialists. We had Prestige, which is a second charge business. We don't do seconds anymore, but you obviously take the calls for that. So thank you very much for that. But we grew Kent probably, if you look at it, into a top 5 buy-to-let lender. Does a lot with big portfolio landlords. All the bit that you talked in Portman in terms of the underwriting, the flexibility. And then, the opportunity came to take your rival, and we brought that into the fold, and that runs really well to where we've got to today. We've kind of, over the last 12 months, sort of straightened out what the brands stand for.
Okay. So what was the main thing that allowed you to actually penetrate the market? Was just getting the sales team right, or getting the proposition? How did you go about it?
Yeah, it's a good question. Seeing the right people was the first thing. So I guess originally the model that, let's just use Kent because it's probably the easiest, it was very packager focused at the time. So I had small distribution. We went on with Legal and General Mortgage Club, took on networks such as Primus, expanded the sales team to, I think, about 7 or 8 BDMs across the UK, and really targeted brokers that we knew. So that was the first big, we come back to MI and data. They didn't have a lot because, of course, it was small. So getting more people registered, seeing the people that we knew at, account people like yourself or other big accounts, going in there and getting under the skin and starting to get them to use the process. And, it was, look back, it was good fun doing it because you could see it literally all the time. And I remember one of the days, we'd done a record amount of business, but because everything was manually underwritten, it was like, should we slow it down? And I remember the CEO going to my boss at the time, no, keep it going. We like that. So we were starting to do serious volumes of business. We stepped up the marketing, but we gave people direct access to underwriters, like you talked about the Portman, and that really helped grow the business.
Yeah, so I always look upon it. So you've either got to compete on price or the proposition, because a smaller lender competes on price, they lose the traction anyway, and brokers will naturally go to what they know, because the bigger guys can actually process the applications. Which so getting the back office sorted is obviously very important. How was that grown?
Well, I mean, we launched a new brand, Rely. It'd be amiss of me not to plug that and get in there. We've made a massive investment in the technology platform. So later this year, Precise will go onto the same stack. We talked earlier about manual underwriting. We still do have underwriters within Rely, but a large amount of it now is automated because they're there to free up and do the tasks that that we need them to do. Whereas back in the day, or even a year ago, every case had to be still manually underwritten. So we're changing the dynamic, I think, of how specialist lenders process mortgages. We have an ethos in the business, a high street experience, but a specialist proposition. And I think that will set us apart as we go through the rest of the year. So, we use automated valuation, all the basic stuff you get in the high street, but that hasn't really been used in specialist lending. So, we've got a big team in 3 sites with the various brands, but we're using the underwriters and the people for the right tasks at long last.
So obviously, for those who don't know, Kent is no longer sort of
RIP, yeah. For intermediaries, because we still do have a savings brand, so
okay,
be careful on that.
From our side,
from your side, yeah.
So how much is Kent Reliance in disguise, or is completely new and a relaunch as to how you want to attack the market?
No, it's new, and you forget we did buy-to-let through Precise as well, so kind of brought the best of both worlds, because Precise had some automated stuff. It probably focused on some of the smaller landlords with just off the high street credit scores. If you put it to TMW or BM, it failed. It would go to Precise and be a little bit more expensive and go through. It is a brand new lender. I think we've still got that ethos of, it can do what Kent did, large portfolios. We're not restricted on that. We still get big landlords coming to us, really flexible on property type, which is probably where the high street falls out. But we have automated a lot of the stuff that data told us we could do.
Yep.
So, instead of it going over to an underwriter, it is like it hits all of these parameters and the property's there. All you need is the valuation. And we, some of the other differences was about making the service better. So, Kent, we used to ask for things like cash flow forecasts, business plans. And it was like, that's what the rules told you to do in terms of the additional underwriting. We built that into the platform, and we're something I never thought we'd see in this business here is we're getting offers out in 2 hours. Completion's done in a matter of days, not weeks. Wow. So it brings the best of what we did in Kent and Precise, but it is a new lender.
Okay, and how are you spreading the word? Because obviously having everything like that in place, it takes time to sort of embed into the industry.
There's a fair amount of marketing gone behind it. Pictures everywhere, and it's a really fresh looking piece of marketing that's been done. But and good competitive products. You have to have products that hit the mark. And certainly, coming out of the last few weeks, as we record this, as with some of the challenges that have gone on in the down in the Gulf. We've gone out quite aggressively to drive business in there because we see an opportunity there at the moment.
Okay, so what are the key areas that you're focusing on? Where do you see the opportunities?
Do you mean as a whole?
Obviously from the buy-to-let side of it.
Buy-to-let is still professionalised, and we do a lot around people that want multi-unit blocks. HMOs are big, as you know. Student accommodation is massive. Someone that pays for a child to live in Nottingham, I can appreciate that. And you've seen landlords diversify into that. Limited companies, you know yourself, it seems to be the way everyone's doing buy-to-lets. We were there at the start. We know how to do them really well. So it's really targeting that professional, but with the offering that you do get people that fall outside of the big two lenders that have the odd credit blip on there as well. And we can cope for that.
So if you think back onto the limited company buy-to-lets, it's sort of always been there. There's some specialist lenders. Was it Irish permanent people? If I remember back in the day.
Well,
but it never really sort of took a handle. Obviously, things have changed now, but. What proportion of business do you think is going down that route?
Well, anyone who purchases, or I would say most people who purchase a buy-to-let are now buying them in a company name. Most of what we do, and you can see it from our results, is it's very rare I see a personal name come through on a buy-to-let. But you do see the occasional one because I'm not a tax advisor, but people obviously need to weigh up, I guess, the cost of transferring it and the cost that goes alongside it. But certainly, I've been here, as I said, 11 years, and it was just as the tax changes came in. So they would have hit 10 years into that, for example. I think that was the game changer, and the market, moved to that. And you can see it by the high street guys going in, TMW are in it, BM are in it now. They wouldn't be doing that if there was still
finally
a big
had
market.
to move into it, haven't they? Because it's finally taken a hold. So from our side, I think a lot of our landlords tend to be not accidental landlords is probably the wrong term. It's the let to buy sort of world where they've kept it and they moved on, so they've never actually taken a foot in. And we're quite London focused. We don't have that many transactions going on. Where are the hotspots in the UK?
Well, you've got cities, a lot of the city centres, as you say. I think a lot of London is built up of people that they retained a property 10 years ago. It suited them. You probably did the let to buy deal. You geared up a little bit on that for the deposit. The other one, it provided a good income. Certainly, all of the student towns tend to be very busy. And I used my sons at Nottingham. We've done phenomenal amount over there. But you are seeing different types of asset being built up there. Whether it's, there's a large contingency of, say, let's say HMOs, multiple occupants for students, but also those big purpose-built type assets. Now, they don't land in someone's lap every day, but we see a lot of that on the commercial side, on the InterBay brand, where people are using that and they're doing big business in that sort of stuff. But, we all know the challenges for people trying to get on the housing ladder. And, you certainly still see that bit in terms of, commuter zones where people have got buy-to-lets, whether it's flats and letting them out as people travel into the cities for work. So, the great myth that everyone, I guess, moved to the north and did all of their buy-to-lets up there, I certainly haven't seen that. I think people tend, and certainly the professional landlords, they tend to focus in the areas that they've specialised in.
And I guess one other point that happened probably about 10 years ago was the additional stamp duty of 3%.
Yeah, crikey, forgot about that.
How's the 5% taking a hold?
Well, I think it's like anything. If you're paying 5% and you're purchasing it, guess what? That 5% is going to come from somewhere, isn't it? And probably people have haggled it. I don't think that the stamp duty in isolation slows down buy-to-let, because, as I said, if I was doing it, I think I'm going to be paying 5%. I'm going to be trying to chip the 5% off what I'm buying in a lot of instances.
Fair enough. And I guess misconception probably from my side, if I look at 5% on a London purchase, it's quite a bit versus looking at some of the more northern
Maybe you
cities.
might revert back up to Lincoln or whatever it is, Dave, on there, yeah?
Well, now it's near enough a Premier League team for Spurs visiting next season, maybe. So how would an investor in London actually sort of go about looking in these sort of core areas if they do want to become a sort of portfolio landlord? You've gone to the trouble of setting up a company. So again, in my eyes, do you set up a company for one? Maybe, maybe not. But if you are going to sort of look to build a portfolio, limited companies, that's certainly the way forward. How would you sort of go about?
Well, the Renters' Rights Act's coming in, so it's who's going to manage the property for you, who's the agent, having that advice about all the changes that are coming down the line there. Certainly, as I said, it's a really interesting bit is, do you see too many people stepping into it at the moment? I think you probably do from some of the younger generation that have good paid jobs that might not actually go, I'm happy renting, but I want an investment or I want a property. But I think 99% of buy-to-let mortgages, the first place they need to go is the mortgage advisor, right? Because you want to have that funding set up, you want to know about the options, and then of course it's, who am I buying the property off? What are the returns? Where can I find out information about that? And then it is about who's going to manage that asset for me, because I think that's more important than ever at the moment. So, let's not make any I guess excuses about it. Buying a buy-to-let is not as easy probably as it was 20 years ago, and having that support network, in terms of professional services around you is really important.
Okay. So what sort of dynamic of person are you seeing? I mean, again, in hindsight, we should have all bought loads of buy-to-lets end of the 90s.
I thought you had a few, didn't you?
No, come on. But the ability to get in there, I mean, I've dealt with clients who've made a lot of money because they got in really early. But like with getting in early to anything, you can miss the boat.
Yeah, but I mean, it's interesting. We see a whole mixed bag. So you see people who've been in it 20, 30 years. Some of our larger landlords are quite mature in terms of their age. And I think that's a dynamic that you're seeing across the market.
Yeah.
But you are seeing, as I sort of tried to touch on earlier, that younger, I guess, more savvy person who are quite often are risk takers, right? Because you have to be brave going into that market and going, actually, I can see an opportunity there. We've got one landlord that does a lot of student stuff. He's been in the press. He's late 20s. He's got a portfolio 15 to 20 million. So, it isn't like people aren't coming into it. And I think the interesting bit will be if with your aging landlord community is, how do they pass that on? Do they pass it on through their family?
Yep.
Do they sell it? Will people come out and buy portfolios and do it that way? So, I think the stat is 1 in 5 in the UK live in rental accommodation. It's a fundamental part of the property market as well.
Okay. And if I think back to landlords expanding their portfolio, it used to be, right, get a hold of one property, it'll go up in value, extract the equity, buy the next one. Obviously, as rental assessments become more tight, when the tax rules change, what have you, how much ability are we seeing actually that happening, or is it they've just got to hold tight?
Yeah, I mean, I guess it depends where you are as well. And obviously, rental affordability is more favourable if you have it in a company name, because it takes into consideration the tax bit. Lenders products look very different than what they did 20 years ago. You know, if you'd have said, I remember when I was at TMW, they launched a product with a 1.5% arrangement fee. People say, you're never going to sell that. It went on to be the most popular product they've ever had. And you can see that, you know, when rates are higher, fees on the buy-to-let loans tend to be higher to bring down the pay rate. So there's ways and means around it. But again, you know, that's why you need mortgage advice. Is that the most applicable product? What's going to happen in 5 years if you've taken a 5% fee and it affects your equity? Are you going to be able to refinance? And, you know, that plays into the strength of the likes of you and your team and why landlords take mortgage advice.
Okay. What are the key areas that are there to be hit that aren't being hit properly at the moment?
Well, I guess that, you know, we've got various brands. We've got Rely doing the buy-to-let. You can see we're aggressive on that. We've probably talked about that. We grew our commercial business by double volumes last year, and bridging as well. You know, bridging through Precise, commercial through InterBay. And we very much position Precise as the residential mortgage brand. Yep. You know, again, that off the high street, people that perhaps have credit blips, 1 year self-employed. There's definitely a market in terms of residential of helping people that don't fit the norm. And we want to grow that. We've grown it well this year. We've had a good start and good demand for the products. You know, bridging is probably and commercial are probably a bit more fringe with what people do it, but they you know, certainly bridging provides a good solution, you know. And I think in the current market where we sit here, where there's been a bit of volatility of rates, there might be some volatility in terms of chains. The ability to move quickly if people want to do that is there. I mean, you know, we sit here as a business, you know, we talk about as OSB Group as a specialist lender. We're not just shoehorned into buy-to-let, having the other strands are there. And the beauty of that is you can flex it going according to market needs. So.
Okay. So actually going on to the adverse credit or credit impaired, whatever we call it nowadays. So if I think back to, if you remember Mark and Jim are the guys who...
Locked in the corner,
Yeah, and then pretty much that team got obliterated in 2007 and 8 when funding stopped, and probably hasn't ever come back to what it was in those days. There were loads of lenders circling around, probably similar to bridging over the last few years where there's been loads around. What is that market like now, and how much opportunity is there?
Yeah, look, I think the market's more professional and it's more stable in terms of the lenders. You know, you've got some players in there that are backed by banks, Precise being one of those. And actually, you know, in terms of some of that type of lending, you do have building societies pick it up. You know, you guys will know occasionally you'll get a deal from another building society. I'm amazed they've done that because he's got a CCJ 5 years ago.
It's not a system decline, is it?
No.
So but
it's in the resi, it's definitely a big market because there are more people that will have had blips. You know, whether it was through COVID, whether it's accidental, whether it's been a gap in employment, and it isn't just about the adverse bit. You couple that with someone that wants, say, interest only. They want a high LTV. They're 1 year self-employed. That probably falls outside of the high street when you blend that together. So we see a good opportunity there in that. But it has to be keenly priced as well. You know, it's competitive. And certainly in terms of, you know, the bridging market, in terms of regulate, it's really good for chain breaks and things like that. And we saw that demand grow for that. You definitely see the demand for bridging grow in a buoyant purchase market because people who want to move quickly. I'm racing against you to buy that property, Dave. How can I get the funds quickly? Well, guess what? I'm able to bridge that while I sell my own one. But you know, it's probably a bigger market than people think. But it's you know, some of the clients that you've got may well have had a credit blip, but it flies to the credit score of another big lender.
So what's it like with Precise, for example, where it's a specialist lender, but then from a bridging perspective, it's a vanilla lender?
Yeah, blimey, we don't make life hard for ourselves at times. It's probably the biggest. I wouldn't use it. We like the term vanilla because it's part of the branding, but it's probably the biggest regulated bridger in the UK. You know, we have many debates. We've got a lot of brands. Should we have done another one for bridging and kept Precise separate? But it had such a good reputation in the bridging market, it would have been foolish to move away from it. I guess the difference is sometimes the distribution is a bit different. You know, you get a lot more mainstream brokers will use Precise Residential. You know, I'm not saying they do 50 cases a year, but they do that one where they go, oh, I've had one fall out of bed with another. Maybe it was a Nationwide or a Halifax. Where do I put it? Precise is normally the first port of call on that.
Okay. So on an education sort of point of view, the mainstream lenders, all their criteria is published, everything's there. You know, sometimes if a broker could be bothered actually reading it and actually go on a calculator, they don't need to actually speak to anyone.
You sound like my old head of underwriting. She used to say that. So.
Well, it's quite simplistic, but of course no one does, and everyone blames the bank when it goes wrong because they didn't read the criteria. But when you are in the specialist sort of lender area, you have to know it, and and it is a bit more about relationships. So how do you go about educating, making sure brokers know what they're up to, and placing the business with you accordingly?
We've invested in a massive sales team. That's first and foremost. There's a number of, you have a number of guides and things like that. And I guess those talking points that you can go out and talk around on there. I think the biggest asset is the sales team, no matter what way you do it. I often, you hear people say, I'm going to go and talk about education and I'm going to educate brokers. I kind of think that's a bit condescending, right? You're qualified people, but I do think it is about that support. People go back to being at the end of the phone, because actually, can you do this case? Can I talk it through with you? Direct access to underwriters, but also, it's having those brands front and center. Every lender probably goes, how do I push that out? Do I push it out on social media? Do I put it on, brands on sourcing systems? You'll know. But I think the best port of call, and certainly what we found, is invest in a good sales team. You have a good underwriting team where they have access to, if needed, and making decisions quickly. Yeah,
this sort of goes back to our original point, talk about the Portman call up.
30 years ago, we had the right model then. So make sure they've got a big book of every case they've agreed and the date they do it.
And make sure they're going out with you later in the evening, though.
Yeah, we had a good budget at Portman, yeah.
So on that side of it then, so the old work technology and things like that, obviously we can't get away with having that sort of chat today. First off, where do you foresee this industry going? A good point you mentioned earlier is about robo-advice that hasn't materialised. Where do you think it is actually going to go?
Yeah, it's a really, 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 really good question. I think it has to improve for the consumer, and what the consumer, what we call it borrowers, consumers, what they demand will influence where it goes. I think in terms of advice, the way in which you get to the advisor might change and might be easier. I guess, people use AI for everything. We were talking about Copilot before we came in here. And will people search mortgages using ChatGPT or Copilot going forward and go, actually, I want that? But it's still a big decision before you click that button. And people will still, it's the biggest decision you normally make, buying a house, or it's the biggest debt you tend to take on. I still want to make sure I get the right decision. I don't think that changes. I think you will get high street lenders that will want to drive more direct to them, because they'll see that as cost efficiency and cost effective. I don't think the specialist market will change that much, but I think the journey will improve. We're all investing in platforms. Can we link into your CRM so that you don't have to key it 3 times by the time we get there? Will we be able to use AI in terms of the legal process, which is probably the most cumbersome point of any mortgage transaction? Can that improve that there? I think in terms of mortgage distribution and intermediaries, you might see a polarization there. So, being part of a big network, whether you're employed or self-employed, who's got good tech that can link into these things, may well be the dominant features of where the intermediary market go. But I still think intermediaries will play a massive part in this. Whether the share is as big will depend on how the banks that want to target some direct business to themselves goes, and how much they invest. And we are seeing some of them invest a lot of money in that.
So from the specialist side of things, what sort of things are you doing to embrace?
Well, look, I said earlier, we want to give a high street type or a mainstream experience for specialist lending. I think we're on a good journey on that, and Rely is the first stepping stone of that. We are very much engaged with how we can use, I guess it was APIs is the bit that people would talk about at the moment, how we can link into, whether it's people's CRMs, whether it's sourcing systems, whether it's platforms, to make that journey seamless. You need some deep pockets to do that. It isn't a cheap process, but we've got the money to invest in that. So, we're constantly looking at how we can improve it, but we are 100% intermediary led, which is a good way to sort of say it, isn't it?
So what's the biggest tip you could give Prestige for someone that's around the industry and speaks of which direction we should be going?
Prestige, keep that second charge number. Would be the first one. You never know what.
Prestige Private Finance, the mortgage broker.
Private Finance, sorry, rather than the second charge business. Yeah. Look, I think, you know, you'll have learnt yourself over 30 odd years of being in this industry. Keeping in contact with people is really important.
Yeah.
Borrow, I guess, they're clients, not just customers, and it's not just one transaction that matters. And, you know, we see it as we go through cycles. People come back to you, people recommend you, and if you give them a good experience, they tend to stay.
Yeah, I think from my side, it's getting the balance right. You've got to embrace it, but you can't let go of the wheel.
No.
As much as Uber's probably got it right on that side of it. But from our side, it's not just a one-off little, you know, pet insurance, something like that. You need to keep that relationship there and also remain relevant.
Yeah.
You know, if you let the banks just do that.
Yeah, if you don't keep on top of it, you could lose it.
And then the client won't get the right outcomes,
absolutely.
Which is the whole great point of being independent. Is actually going to the market, go, right, Adrian's brand, it's not just your branding, it's the proposition below it, which is obviously the point about education and what have you. So just getting to the end of things now. So it's been great to have you on board. Great. So we haven't even talked about Liverpool yet, so
shall we?
We'll leave that to next season, I think. So, but no, so just a few other points to round up on. First time buyers or portfolio landlords, what would you love to deal with?
I like to do a lot more first time buyers because we want to grow the residential bit. You know, we made significant changes in terms of LTVs, interest only, new builds over the last 12 months to support that market. I'd like to continue doing all the portfolio stuff we do because, you know, we're an important player in it. So 50-50, a bit of everything really. Okay. I'm greedy.
And how many more brands can you actually put out in the market?
I've got no black hairs left anymore, David, at the moment. So, you know, but never say never. You never know, do you? Fantastic.
And what does the future hold for Adrian Moloney?
Well, hopefully I'll stay at OSB for a while longer. You know, we've got a new incoming CEO. You know, the business is growing. More of the same, hopefully.
Fantastic. Great. Well, look, big thank you for me. Thank you for the guys at Prestige. Thank you for all the support you give us.
And likewise to you.
And thanks for being on board today. It's been great to have a catch up and a good chat with you after all these years.
Thanks, David. Cheers. Great.